In this section, I'm going to take you through some of the sections in the Financial Markets and Products, FRM Part 1, Book 3. This is a quick overview for some of the sections. Now, what I have here is for the 2023, 2023 November exams. So if you're watching this after this particular year, some of these topics could change, so just bear that in mind. Now, of course, I don't have all the topics. I have the first 1, 2, 3, 4, 5, 6, 7, 8, first 9 topics, and I'll try and cover the other topics separately. So here I just wanted to give you a very high level overview on what you should look out for and how you should cover. Of course, now in this video, I'm not going to go through every detailed section, which I've covered most of these in our course separately, and also there are some YouTube videos where I've covered some sections. But in this video, I just wanted to give you an overview of some of the topics that you should focus on, and just some of the thoughts I have on some of these topics and how you can use this information to enhance your study and also to plan your studies basically. So the first section is banks. Now this is mainly a theoretical section, but also quite important. Depends on your background. If you're not worked in banks, or if you're planning to work in banks, or if you're planning to move into banks, this section will be quite helpful. So in this section, you have the economic and regulatory capital, which is it doesn't go into that detail in the FRM Part 1 syllabus, but it has a particular overview that is important to understand. And also you might have a question in the exams relating to economic and regulatory capital. Probably now remember, one of the things is that now each of these sections in the FRM Part 1 exams, you could have 1 or 2 questions from each one of them, but it's not guaranteed. Some of the sections they might even skip, and some other sections you might have more questions. So that's a very high level indication. Now, economic and regulatory capital, then you have something called deposit insurance. As you can guess, deposit insurance is basically talks about how the depositors are covered. There's an insurance that covers the depositors. And also it talks about the various financing opportunities an investment banks has, so investment banking financing function. So basically part of the investment bank function, an investment bank can organize financing for corporates and how that works and what are the various types of financing, etc. Banking book, trading book. Banking book, trading book is now in FRM Part 1 it doesn't cover a lot, but it is quite an interesting topic. It's part of FRTB, Fundamental Review of the Trading Book. You will learn a bit more on FRM Part 2, and it has a lot of practical implication. For example, if you're planning to work in the market risk department, or if you're already working in market risk, FRTB is a hot topic, and basically everything in market risk revolves around FRTB, and it's quite a key topic. So banking book and trading book is part of FRTB, but in this syllabus it talks about banking book and trading book at a very high level. And then of course you have also originate to distribute model. So basically that means you take the money from the depositors and you're giving it to borrowers as loans. So this originate to distribute model, and I have some videos on that which I'm talking about that in detail. Now the next one is insurance companies and pension plans. So in insurance companies and pension plans, let's get to that section. So we have something called mortality tables. Now, I would recommend spending some time on mortality tables to understand how it works. Based on mortality tables, we can calculate the premium for a life insurance or for other type of insurance products as well. And this topic, if for example, this section mortality tables, if you don't understand mortality tables properly, it might be a bit difficult to attempt any questions on insurance premiums, etc. So that's a section. It's not that difficult, but it's important to understand that properly. Then of course we have mortality risk and longevity risk, two types of risks. Longevity risk is basically the risk of someone living for longer, the risk for the insurance company of someone living longer. And then of course mortality risk is if someone has a particular accident or something, then for example, for life insurance, you need to pay your premium much earlier than you thought. So there's two types of risks for a insurance company. Then also when we talk about pension plans, defined benefit scheme and defined contribution scheme. So you'll learn about that, defined benefit and defined contribution. And then also there are a couple of ratio calculations, loss ratio and various other ratios. Now again, any calculation sections, it's important that you familiarize yourself and understand what's happening, because any calculation sections you could come across those in an exam, and most of the time in an FRM exam, sometimes you might not just directly be given a particular question where you can just plug in the variables and get your answer. Any question as any of those kind of questions where you just plug in the variables and you get an answer, I would say it's a bonus question. Normally in an FRM question, there will be some sort of a logic or a understanding that you need to apply. So it's quite important that you understand the calculations. The same thing with the mortality tables as well. And then finally, it also talks about the capital requirement for insurance firms. So as you can see, the first couple of sections, I'll be talking about a couple of them here. They are quite theoretical, but also you need to understand the concept or the big picture. Third one is fund management. Fund management. Now, fund management, it talks about basically mutual funds, exchange traded funds, etc. So fund management, you will learn about mutual funds, exchange traded funds. You will also learn about the differences between hedge funds and mutual funds. Then also you will learn about some undesirable trading practices. That means there are some trading practices that are not encouraged, and there could be some consequences due to those kind of trading practices. There's a section on net asset value, where you calculate the net asset value of a particular portfolio, etc. This section is quite interesting. Hedge fund strategies, various strategies and hedge fund adopts in order to generate profit. Some of the strategies are risky strategies. Some of the strategies are related to a particular asset class, for example, fixed income, bond portfolios. Then there are emerging market strategies. That means markets which is still developing. Some funds invest a lot of money in emerging markets to expect high returns, etc. And then also, how do you measure the mutual funds and hedge fund performance? So you'll learn about those. So fund management has a mix of a bit of calculations and some theoretical concepts, but it's an interesting topic, and I would encourage you to spend some time to learn this as well, because in these sections you could get a couple of exam questions, and it's important that you understand them clearly. The next section, now derivatives. I'm not going to talk about this too much because this is an introduction to derivatives section. Now in book 3, there are quite a lot of sections where you'll be learning about individual derivatives such as interest rate swaps, futures. It's quite a lot of sections in options, forwards, etc. So this section gives you an introduction. Now having said that, I would not advise you to skip it, still go through it, but in this section I'm not going to cover that because derivatives runs across the whole book in book 3 and also in book 4. Then these two sections, exchanges and OTC markets and central clearing. Now both of them, they focus on giving you an introduction to what are over-the-counter markets, the difference between an exchange and over-the-counter market. It also introduces a concept called central counterparties, CCPs, the risks of something called bilateral clearing. Bilateral means settling transactions between two parties. Why it's risky and why CCP helps to mitigate or to reduce that risk. You will learn about those. And you will also learn a part of in central clearing. Again, you will learn about quite a lot about CCPs, central counterparties. You will also learn about some calculations called margin calculations, margin transactions. That means if you're trading with a CCP or if you're trading bilaterally, how margin transactions works for option positions, etc. Now that is a part where you have quite a lot of calculations. I've covered that in detail, where it's quite important that you become familiar with margin calculations, which can be examined. Then futures markets, this is I wouldn't say it's purely theoretical, but it kind of gives you an introduction to the futures market. It talks about the characteristics of a futures transaction. You'll also learn about the various order types in a futures market. It talks about a bit on, gives an introduction on how to hedge a futures transaction, etc. So this is, again, the futures markets is a slightly a theoretical section, but it's quite important that you understand this section properly, because from futures markets then you'll go into futures for hedging. Now futures for hedging, this section has been part of the FRM part 1 syllabus for quite a long time, and it's quite useful and also a practical chapter. So you learn about short and long hedges. In other words, how do you hedge a transaction, short hedges and long hedges. Now whether you're planning to work in a bank or you're already working for a bank, financial institution, or even a corporate, you might be using short and long hedges. If you're in the treasury team, front office, product control, etc., you might see, or even finance, you might be seeing these transactions. You'll also learn something called basis risk. Now basis simply means difference. Basis simply means difference. You'll learn about basis risk. What is basis risk? You'll also learn about cross hedging. Now cross hedging simply means you're hedging something. Say for example, you want to hedge airline oil, but you're hedging with crude oil futures. So it's not a 1-to-1 match. That's what it means by cross hedging. You want to protect your company from fluctuating prices in, let's say, airline oil or jet fuel. Probably airline oil is not the right phrase. Jet fuel. You're hedging jet fuel using crude oil futures. So that's called cross hedging, because the derivative that you're trading to hedge your position is not the exact underlying. So for example, you're hedging jet oil. So you have a exposure to jet oil. That means jet oil prices can go up and down, but you're hedging that with crude oil futures. You're hedging that with crude oil futures. As you can see, these two are not the same commodities. They are two different things. So that means these prices will not be moving in the same way. So that's what we mean. mean by cross hedging. So you'll learn about cross hedging, and then also P&L on hedging, how to calculate the profit or loss on a particular hedge transaction. You'll learn about a concept called tailing the hedge, which is also quite popular. And in this particular sections have been examined. There has been many FRM Part 1 questions using this section quite so some time. And then also how to change the beta of a portfolio. So this is a very practical section, and I'll encourage you to take some time to understand this. And I've done a couple of videos on this, and part of the revision section I'll be doing some deep dive into some of these topics which are more likely to be examined and also which are more practical as well. The next section is foreign exchange markets. Again, it's a fundamental section in the sense of the topic itself. It's very practical. It's very difficult for you to avoid foreign exchange in any department in a financial institution, whether you are going to be working in front office, market risk, product control, middle office. You'll come across foreign exchange. So you'll be learning about spot quotes and forward quotes. Now, it might sound easy, but once you go through some of these sections, you will realize that it's quite important to understand how the spot quotes and forward quotes work, bid-ask spread, how bid-ask spread can increase and decrease, and what are some of the factors, multi-currency hedging, and then also we have purchasing power parity and interest rate parity. So these are quite important. Actually, you can have quite a few questions based on these concepts. So it's very important that you understand them. Now, what I've shown you here is not the full syllabus. I've just picked a couple of topics that I think is quite important for you to understand. So what I do also is that when I do FRM revision with my students, normally what I try to do is I try to go and do quite a lot of deep dive in some of the sections which I feel the students might require more practice or more understanding. For example, foreign exchange markets, futures for hedging, and then of course fund management is a easy section, but still you need to make sure you understand some of the calculations. And again, insurance company pension plans, again, it's an easy section, but still it's important that you understand. And in the next section I will cover some other topics, forwards, futures, options, etc., and which is a bit more calculation heavy topics. So from my perspective, FRM Part 1, Book 3, it's not difficult once you understand the concept and once you are able to tackle the questions. So that's the important thing. Just learning a formula might not help. And also, it's important to think beyond the FRM exams. When you're practicing or sitting for the FRM exam, it's very important to think beyond it. In the sense, how are you going to apply some of these concepts at your workplace? For example, if you're planning to apply for a job, could you explain a particular concept in 2 minutes if you're interviewed on some of these topics that are being used in the workplace? So it's quite important that you understand the concepts and also try and apply them from a practical perspective. So that's in a nutshell. I was planning to finish this video in 10 minutes. I think it's taken us about 19 minutes. And I'll try and do another one which also takes you through the remaining sections in book 3. If you have any questions, drop us an email or contact us through any of the info on the description.